Bitcoin is retesting the 2-week Gaussian channel upper band. A break through this level will result in a macro continuation upwards. Until then, resistance is resistance and Bitcoin is beginning to show signs of exhaustion. Will we see that break toward the upside, or could we potentially see a correction? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic weekend. In today's video, we're going to be taking a look at Bitcoin on the macro scale, discussing the Gaussian channel, the retest of the upper band, the total cryptocurrency market cap and total altcoin market cap, the short-term price action and next likely moves, and the possibility of a daily/weekly correction. Will we see a break back to 32k, or are we going to break through this Gaussian channel toward 48? Before we get into it, smash that like button, hit that comment button and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us in our VIP channel. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, guys. You will also get access to our group chats, our general chat, our trading chart and education chat, our trade setup chat in here, guys, our news chat, our help chat, and of course our daily video chat. If you're interested in joining over 600 members, contact me in the pinned comment of the free channel for more information. Let's go ahead and dive right into a video starting on the market data. So as you know already, guys, the weekend is generally quite a slow one. We don't really see a lot of volatility. We don't really see a lot of volume. In fact, the price action has pretty much just been moving sideways on that hourly chart. If we look at the last few days of price action, the last weekend, we really haven't seen too much, right? We've seen a small little grind upwards, a retest of some of our key support levels, but not too much of a definitive move in the market. In fact, Bitcoin is still showing signs of overall exhaustion. Moving back to that data, we can see with that weekend coming in, negative 42% in the volume, sitting at $61 billion, and 24-hour liquidations are sitting at 78 million, down 47%. So a pretty big reduction in overall volume and volatility market-wide. Looking at those liquidations, we can see 53 million came from those long positions, and that is indicating, again, we haven't seen a lot of movement. So $53 million in long liquidations in this tie range indicates a lot of people were over leveraging themselves in longs at this break, at this retest of 38, expecting a clean breakthrough 38, and now they are in these late longs, these high leverage longs, being squeezed out at the bottom over here. So we're seeing a lot of those longs actually being taken out now in those liquidations, and shortly behind at 25 million in short positions. Again, a lot of people shorting these lows, looking for breakdowns, but early shorting these lows before we actually had a definitive breakdown, while Bitcoin bounces short-term back upwards. So taking out both sides again, we generally do so that in these chop zones. Moving over to the volatility index, we can see that on the 30-day period, we haven't had a significant change. We've seen a little bit of a bump in volatility, which is good to see. It is nice to see volatility to start moving up with the price action. And of course, on the 60-day, we have seen more or less the same thing over here. Again, we do want to see a significant change in volatility as the price makes a move to indicate there is strength behind that movement. Moving over to the DXY, the DXY has done pretty much what we've said. We said if we stay below this blue line, which is our uptrending support, we're going to see a continuation toward the downside. So the DXY has been continuing downwards, and we will actually expect a full-blown retracement all the way down to this local low point if this downtrend continues. So we're looking for about 103 on the DXY. The DXY continues down in the upcoming week. We could potentially see a bullish reaction in the stock market, in the Dow Jones and the S&P, both charts looking eerily similar over here, both having that respective macro downtrending diagonal resistance and extension from that local top, which we've drawn a horizontal line from. We can see on the short term, we have got the S&P 500 breaking out of that short-term diagonal downtrend, of course, which is a bullish sign. We do expect a continuation from this level to at least retest this downtrending diagonal resistance. If we break through that resistance, we are very likely to continue towards that local top. However, if this resistance does not break and the S&P falls back below this horizontal red line, we'll be entering a new short-term downtrend, which could definitely take us lower. So short-term, we do have this strength in favor of the bulls. The bulls definitely have control over here, but watch the open for the week. Watch how the price reacts. Watch what the DXY does. Particularly, watch how the S&P reacts at this diagonal. And I'll go ahead and say the exact same things we just discussed on the S&P apply over here on the Dow Jones. We have the same trend lines, the same short-term breakout, the same diagonal trend line, and the same top point. If we do break below this horizontal red level, we will expect a continuation lower. If we break through this diagonal, we expect a continuation higher. So we won't spend too much more time discussing that. Before we get into Bitcoin, quick word from our video sponsors, Bitget and BingX, and we'll jump right into the charts. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Let's get into the video starting on Bitcoin. So, like we said, guys, we do have a lot to discuss today. We're going to be discussing Bitcoin's weekly, the possibility of a rejection from this level, how low that rejection could take us, the short-term price action, the weekly charts, the monthly charts, the total cryptocurrency market cap, the total altcoin cryptocurrency market cap, and of course, guys, this Gaussian channel. So we'll get started straight in on this chart. Bitcoin is retesting the upper band of the Gaussian channel. Now, the Gaussian channel is a phenomenal tool at indicating the overall strength of a trend on a macro scale, but also the expected trajectory of that trend. Now, the Gaussian channel per se doesn't give you price targets. It doesn't tell you where the price is going to go on a price level, meaning it's not telling us Bitcoin is going to 50K or 48K or whatever. It doesn't tell us that. It tells us the overall expected trajectory, and then we apply that trajectory of the context of our structural analysis to indicate points of which the price could potentially move to. So it's more or less an overall indication of the health of the market and the direction of which the market is moving, and whether or not that direction has strength behind it, and we can expect a continuation or not. So it's a bit of a mouthful, but if we take a look at the Gaussian channel is officially retested the upper band of the Gaussian channel. If you remember back to our charts and our videos all the way back at the start of the year, we said that if we broke through the Gaussian channel, there are two key points we're looking for. A retest of the midline, and if we break through the midline, we're looking for a retest of the upper band. So we have now officially ticked that off. We have seen a retest of the upper band. The upper and lower bands of the Gaussian channels provide the most areas of resistance within the channel itself. Meaning, although 38K is a trigger, although we are technically bullish, it is still going to be acting as a roadblock for a continuation upwards. And that 38k level lines up with our short-term analysis and our higher time frame analysis, which indicates again that 38k level is the lower level of resistance in the 38 to 40k resistance. So we have structural and now we have technical confluence to indicate that 38k is a level that we need to break above to see a continuation upwards. Furthermore, guys, if we take a look at the Gaussian channel, what we generally see is when we break through the Gaussian channel, whether it be from the bottom side in, so that's a breakthrough, or whether it be from the top side down, that's a breakthrough, we do generally see, there's about a 70% accuracy, a little bit higher on these smaller time frames, we'll see a break out of the other side of the channel. So we break into it, we generally see a break out of it. We break into it, we generally see a break out of it. If we go down to a smaller time frame, such as a weekly chart, we can see a little bit more how common this actual occurrence is. We can see, again, a break into the channel, we see a continuation through it. A break into the channel, we'll see a continuation through it. A break into the channel, a continuation through it, and it goes on and on and on. We can even see here on the weekly chart, when we broke through the channel, we actually went through the channel. So what does that tell us on a 14-day chart, on this 2-week chart? It tells us that 38k is of course a level of resistance, but more importantly, it tells us that the overall expected trajectory of price action is still upwards, meaning we do still expect a break above the upper band of the Gaussian channel before we ever lose this lower band once more. So this is indicating we have a high time frame level of support sitting at around 22, but more importantly, we have an overall expected trajectory of price action, which would take us through the upper band of the channel at some point. This, of course, is very bullish on the macro, but even in the short term, if you're looking for continuations, we know now that 38k is a very important level that we have to break upwards to continue through. So let's take a look now at the structural charts. If we take a look at our daily, we can see a few things. So it's our 3-day chart. We of course will take a look at the daily in a second. We got the 3-day chart up, which is a little bit easier to see. We can see I've gone ahead and plotted out our key levels of support and resistance on this chart, represented by the red levels of resistance and the green levels of support. If we label these levels, we have our 48k level. This is going to be our bull run trigger, meaning if we break above 48k, we will officially enter a macro bull run. This is going to be where the bull run starts. And we can confirm that by taking a look at the 4-year cycle. So let's go ahead and do that. If we take a look at the 4-year cycle, overlaid with our key horizontal trigger points, we can see 48k is represented by that dotted trend line. We can see the dotted trend line in the past, and we can see the dotted trend line in the past. The dotted trend line reflects the dead cat bounce high of the prior cycle, right? The dead cat bounce high of the prior cycle. We can see every single time we close a monthly candle above this level, we officially enter a bull run. Okay, we officially enter a bull run, and therefore this level is going to be our bull run trigger. We have seen in the past a strong rejection from this level, which took us back down to our horizontal trend line. So a real possibility would be a retest of 48 and a correction back to 32. That is something that could occur. However, we're not discussing that today. In terms and sakes of the video, 48k is going to be that bull run trigger. So moving back to the short-term chart, we of course have the 32k level, and we have the 38 to 40k level. So the 38 to 40k level is going to be the Gaussian channel upper band, okay, and this is going to be a trigger for a continuation to 48k. So we'll see a breakthrough 38 to 40. We are going to see a continuation upwards to retest that bull run trigger point, which is the 48k level. Moving downwards, the 32k level is the level of support which facilitates a macro uptrend for Bitcoin. Meaning, while Bitcoin is above 32k, we are technically in a macro uptrend. We transition from a weekly uptrend, okay? We enter entered a weekly uptrend above 25.2. 25.2 upwards is a weekly uptrend. We entered a weekly from 25.2 to 32k, and we entered a monthly uptrend from 32k to 38k. So we lose 32k, we lose that monthly uptrend. We are starting to see signs of exhaustion. If we go to the 3-day chart, we can see on the 3-day chart, we have our market cipher B printing a red dot right over here, which has been the highest red dot print ever since March 2021. We saw back in March 2021 when we printed it all the way at the top before we saw a massive correction. And I'm not saying Bitcoin is going to see a massive correction like we saw in March. However, we are seeing signs of exhaustion which could develop into a correction. It is very unlikely we lose $32,000 again. Again, if we do lose 25.2k, that is going to send Bitcoin into a macro bearish trend, right? This is macro bearish, high probability Bitcoin will retest these lows if we lose 25.2. But until then, we have our 32k support, we have our 28.6k support, and we have our 25.2k support. Again, a loss of 32 wouldn't be surprising on the short term. If we close a monthly candle below it, it would be very bad. If we lose 28.6, that is incredibly bearish. As we lose that macro, we lose that weekly uptrend, and we lose 25.2, we enter a macro bearish trend. So again, we have a bunch of high time frame supports layered below us. But moving back to our short-term charts here, we can see on that 3-day, we do have a red dot printing. This is a sign of exhaustion. This is suggesting we've had positive momentum ever since the Friday the 13th of October. Okay, we had a positive momentum flip. Momentum's been strong and positive. However, we are now starting to see momentum drop. We are starting to see a shift from strong positive momentum to weakening positive momentum. This is an indication of preliminary exhaustion. Now, I would go ahead and add, it is completely normal to see exhaustion at resistance. So this isn't like a random thing that's happening as a big warning sign that's crazy and unexpected. This is completely and utterly healthy and expected. It is natural that we start to see exhaustion occur at resistance. The next big question is, will this exhaustion actually develop into a downtrend? Will the bulls lose control of this trend? Or are the bulls going to absorb this potential accumulating selling pressure at this level and push the price upwards? To answer that, we'll have to go to our short-term charts. We'll do that in just a moment. Let's go down to the daily first, and then we'll get into the short-term. Another really bad thing we can see over here is, of course, this RSI breakdown. This here is indicating for the first time ever since we established this trend, again on the 13th, we have 1 test, 2 tests, established trend. We have lost the uptrend, so momentum is officially now heading downward. So again, suggesting weakness, suggesting exhaustion. This potentially is indicating a correction could be brewing. Let's head down to the short-term charts, guys. So moving to the short-term charts, there are a few key levels we are watching. First and foremost, the 38k level. A breakup at 38k sends us upwards. We know that already, okay? If we see a breakup at 38k, that will be 1, that will be 2, that will be our third retest. We'll potentially be in an ascending triangle formation. If that does occur, we are very likely to see a continuation upwards if 38k retests and breaks again. Our next key level is going to be our bearish trigger. We actually have 2 bearish triggers. We have our horizontal bearish trigger, and we have our diagonal bearish trigger. The diagonal bearish trigger is actually also the uptrend, right? This is our uptrending support. So if we see a break of this bearish trigger at 33,350, we're going to see a loss of this range low, and we will see a continuation downwards to our nearest support. Our nearest support is not 32k. Remember, 32k is a range. It is a range of support. It is not a horizontal level. It spans from 32k to 30,600. So we'll likely see a move within this range over here. If we go ahead and bring up our VIPV, we can see from about 32,000 onwards, we start to see that VRPV start to move up until we reach 30,600. So we're very likely, if we lose 33.3, to see a very volatile move to 32k, and then a slow, gradual, exhausting downtrend to 30.6 before we continue back upwards into this range again. That is a very likely scenario if we lose 33.3. If we move back to this trend, which is our uptrending support line, Bitcoin is technically in a uptrend while we remain above this trend line, and therefore we shouldn't be overly bearish over here expecting an immediate correction. What we should be doing is collecting the evidence, collecting the data, saying, well, on the 3-day we see this, on the daily we see this, on the short term we see this. If this occurs, sorry, I knocked my mic. If this occurs, we could potentially see a correction this low, and we are starting to see exhaustion, so we maybe shouldn't be max longing over here. Maybe we should be looking for corrections. Maybe we should be a little bit more conservative with our capital allocation. Within the market right now, this is kind of the mindset you should be having, because the uptrend hasn't been lost, right? This is our uptrending support, and while we remain above this level, we do still have a possibility to retest and break through 38k. If this level is lost, however, then the breakthrough 38k becomes a very, very low probable move. The most probable move then becomes a correction to 33.3. So watch out for that, guys. Let's go down to an even smaller time frame and take a look at what is happening in the immediate price action. So the immediate price action is obviously very, very choppy. It is the weekend. We don't see a lot of decision during the weekend. In fact, we see a lot of indecision and a lot of chop. Let's go ahead and try do a quick structural analysis. So we can see we have our RSI trend line over here. This, of course, is our momentum. Our RSI trend line will draw from our lows over here across. We can drag it across. We can see we're potentially breaking down from this level. In fact, I would rather bring up the market side of B for this one just to see more visibly how we are seeing the momentum. So we can see the momentum is still positive. As we are above this 0 point on the market side of B, we are starting to see exhaustion kick in, so weakening positive momentum. Money flow is negative, suggesting again we do have that exhaustion kicking in. If we do see momentum continue downwards, we are very likely to become negative. And if we do become negative, we are very likely to retest at least this 36k level, which is very close to that uptrending diagonal support line represented by that thicker black diagonal trend line. So short term, uptrending support line over here. You can see we are currently retesting our level. We have our uptrending resistance, which is represented by here, a potential wedge formation. This is what I would call a low confidence wedge. The reason I would call it a low confidence wedge is because we have a lot of strong wicks above this resistance, okay? And of course, we have this occurring in a lower volume environment, which is the weekend price action. So I wouldn't be surprised to see some sort of fake out, either to the bottom side or upside, and then a new developed structural pattern occurring over the next 24 hours. I wouldn't be trading this personally. It is not a higher enough confidence position. It is not a higher enough confidence consolidation. It is still too choppy. I would personally just be watching it develop, maybe taking some higher time frame positions and watching our price action. Primarily, the most important things are what we discussed on this 4-hour chart. These trigger points are still going to be the most important levels. Let's quickly go over the total cryptocurrency market cap. So the total cryptocurrency market cap, and again, this is mostly Bitcoin, 40% of the market dominance, we can see it is technically bullish. If we really zoom out over here, guys, we have two phases. Again, we've been saying this for so long. Two phases. We have, of course, our bearish phase and our bullish phase. This, of course, is very, very bearish below here, and this, of course, is very bullish. And very bullish, I mean, we have the potential to establish a bull market, establish a macro uptrend. And therefore, while we remain above this level, we are technically bullish, right? If we lose this level, that is when you should be very, very worried. That is when we are starting to look very bearish and actually potentially come lower. As, remember, guys, this is a neckline of resistance. Therefore, if we lose that neckline, that would indicate deviation above the neckline. What happens to the trend? We see a downtrend develop towards our next level of support. Whereas our next level of support, we are looking for this range over here. So we have a huge correction possible if we deviate below that level on the total cryptocurrency market cap. Looking at altcoins. Altcoins are also hitting resistance over here, represented by this horizontal resistance chunk. 444 billion. if we do see a breakup at this level, altcoins will absolutely rally. However, this is a huge level of structural resistance. I would also add, altcoins did break out of a year-long plus downtrend. This is a year-long plus down, nearly about a year and a half. So right now, we are in a uptrend, but we are challenging resistance. So if the uptrend continues, we are very bullish. If we break through, the uptrend will continue. However, if we come down and lose this downtrending support again, we are going to be looking for brand new lows on altcoins. So watch out for that. Thanks for watching, guys. I'll wrap it up there. A lot to go over in today's video, a lot to decipher, a lot of information to kind of crunch through. In tomorrow's video, we'll get back into the short-term charts and discuss what is going on. Thanks for watching. Catch you guys in the next one. Check out the Crypto Academy courses, link down below. Cheers.